All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Been a very interesting 2 hours in the market here this morning, and as I've kind of been watching and adjusting a few things, been kind of looking and saying to myself, okay, are we seeing any real dynamic change out there? Meaning, do we see the market internals changing? And the reality is, we're not. We didn't see it on the gap down. We haven't seen it since. I think there is one chart that speaks volumes about everything that the market thinks this morning, and that is the IWM. Now, ultimately, by the close, the IWM could give up and then gap down tomorrow and be at 152 in the next couple days, right? That could happen. But we are seeing what is happening here this morning is that a lot of that money that rotated out in Asia, rotated out in Europe, is rotating in here to the U.S. And that's what it really looks like. It looks like a rotation into the U.S. rather than a mass, global exodus out of equities. It looks like a sell China, emerging markets, buy the U.S. Type of situation right here. And, if you think about what China's GDP would look like if you put the tariffs on, and now you compare that to the U.S. and you kind of do some of those, comparisons, U.S. markets are significantly more attractive in an environment where there are more tariffs on China. And we continue to see the markets tell us something. And they tell us that, look, a prolonged trade war hurts China way more than it hurts the U.S. That's the message from the markets. That is kind of what the price action has shown over, time and time again here. But there has not been a smidge of selling in the IWM in small caps here since the open of the market this morning. And in fact, here we are with the IWM, and it just pulled back a touch. All right, finally. But you take a look here. Since the open, it was bought up right away. We saw this little dip, bought up, and it has just been ripped and ripped and ripped, and almost back to Friday's close. I think that just speaks volumes in terms of the overall market mentality here. Yes, volatility indexes are up. Yes, global stocks are down. We're seeing a few names start to go green: the Disneys of the world, Teslas of the world, Spotify's of the world. But this is what the reaction is so far this morning. So far this morning, we are not seeing things like the bullish percent index give any kind of bear signal. We aren't seeing the overall volume flows, switch and go bearish. We're not even seeing. I mean, here if we come into just a scan here, just the number of stocks above and below the 7-day moving average here in the S&P 500. Maybe. Let's see. It's still almost 40% of the S&P is above the 7-day moving average. We're not. Yes, we are seeing a migration, a lot of stocks breaking the sevens today, but it's not to the magnitude that we would typically see when the market says, all right, we're ready to just go and correct and sell off in a big way here. So that's what we're looking at this morning. There have not been any real market clues in the volume so far. We just have not seen any kind of real volume dynamic, especially in S&P futures, that has been telling. And it's one of those where on the open, very shortly after the open, we got a report that Chinese delegates were still coming to the U.S. Now, there's still some unknowns in terms of when it comes down to that report, but that's what the market action has been so far here this morning. So anyway, that's where it's at. Now, if we go to another time period. And you've seen me go back to this time period a few times, and just because the market has this, it just feels like this in so many ways. And let me come in, and I'll just let me get the dates in here. We'll take a look at it. we have this kind of March April rally here in 2010, and it was a rally that many would argue shouldn't have happened. That with what the problems were and what the earnings and the economic data were at the time, it was just kind of a nonsensical rally, and you could see the rally on volume. There wasn't any upside volume to the rally, right? And it was a rally I was fund managing at the time, and we happened to kind of get a lot of exposure in near the bottom as we saw this big volume candle, and we rode most of it here through March. But April we started shorting the market, and you know what, it would just have these days up on no volume, not a lot going on, and then we'd have this shot down, and all right, are we going to sell off? And then nope, up, then another big shot down, and then a snap up, shot down. And we just kind of had the market grind during that month to kind of just no change during the course of that month. Right, we look at April, this month, it doesn't have the same kind of chop dynamic here, but it does have some of that, just not a whole lot of change in the indexes here for the month, now, depending on which index you're looking at. And then we got this action where, the market fell sharply. And this was the flash crash. Now, keep in mind, this happened later on in the day. This didn't happen in the morning. In fact, by the morning, the market had already been down big. Everyone thinks of the flash crash as, oh, everything just came in and all of a sudden the market's... No, the market had already been down big. And then we just saw this kind of cascade effect down. And by the close, it rallied on back, and it rallied back very sharply. But take a look at the action afterwards, because that's what matters. When we have an event, when we have something that possibly shakes investor confidence, there inherently is some buy that comes in, right? We'll either see a further sell and then buy, or a buy and then sell, right? But the reality is, many times we see the levels that were created, or the levels that happened during the event. We see those levels get revisited, and I think that is kind of the key here as far as today, and understanding, okay, market, where's it going, what's going to happen, and all of that jazz. I think you look at the levels that have been created here in the market today. We have this 29.10 and 29.83 level, and I think you have to kind of just assume that ultimately the market will be trading back into this level at some point. That this is going to be a short-term target. If the market rallies from here, we're probably coming back here. If the market dips and zips below this level, we're probably coming on back here. And I think that's really the only big tell that the market's given here today in terms of levels and levels that matter, right? And you'll notice I didn't say one specific level. I talked about this kind of range here. I think that is the, that's the message from the market here this morning. There's still plenty, there's still a lot that has to be sorted out, a lot of unknown, and it's going to be news driven here in the next little while. It's going to be news driven, and it's one of those where you go, can you predict the news, right? Do you want to predict the news? Overbought, oversold, yeah, overbought, you probably had some short exposure. Oversold, you probably had some long exposure. But let's face it, the magnitude of movement here today has not been anywhere near what we have seen in other time periods, like the flash crash, or even U.S. President Trump election, or Russia invading Ukraine. I mean, we just haven't seen the same dynamic movement. Yeah, I know the market dropped and was down 50 points, but on a percentage basis, the moves are still relatively muted. The only place where we have a move that is outside of that kind of 2% area is China, but we aren't seeing it outside that area, at least not yet here in the U.S. Okay, so anyway, those are my thoughts here on the dynamics this morning. For me personally and kind of, what I've traded, I sold my Bank of America puts this morning. I held my calls. I had both going into the weekend. I sold my Caterpillar. I'm out of that. Just sold it this morning on the open. And then I sold half my FedEx. I'll probably add the other half back in. But the BABA that I had a nice gain on, it's gone. But I am holding that for earnings here, but that's it. I haven't added anything here today. I still have my SPY and IWM puts that throughout the summertime period, and like I mentioned earlier, I need a lot bigger of a drop in the market to pay those off than what this small little dip is right here. But as I've gone through things, as I've kind of looked at various charts and various setups, I kind of look and I say, okay, is there something here worth entering right here, right now? Maybe we saw Nike break down last week, and we see it coming on down, but it's not worth entering right here, right now. We saw Ford upgraded this morning with a price target of 10, and it's held up very well. It was kind of an analyst kind of backhanded upgrade here. We see things like Alcoa continuing to break on down, continuing to kind of push below these lows from February, March, April. Is right here a fantastic entry point. And for me, I've just kind of said I want to see a little more price action play out here throughout the day. I do think there is more news coming, to the markets, and it probably comes after the bell today. Is probably when we'll see it. Now, I was asked today if my apologies. I'm looking at my note, and I know there was a question here that I was supposed to answer, and I'm not seeing the question on it. All right, so I'm going to I'll do that here this afternoon. But anyway, that's what's going on out there. That's kind of where some of the things sit out there in the market here this morning, and just kind of what the price action indicates and dictates. There will be a lot of bullish talk if candles end like this, right? Like the IWM or like the EEM. There will be a lot of bullish talk out there with those environments, but it's one of those where you need kind of a gap up to confirm, when you see these types of bullish reversals. That said, when they gap up, the confirmation tends to be pretty solid. If you're looking to buy, right? If you're looking to buy, take some of the best stocks that you have on your watch list, the best fundamentals, right? And buy those. Buy the cheap, buy the inexpensive, right? I mentioned this morning, if we see AT&T hold up this morning and not sell off aggressively this morning, that's a pretty good sign that buyers are going to come into the market. And that's what we saw. We saw that with utilities. It doesn't mean these stocks are going to go up, and away, and it doesn't mean they say anything about anything right here, right now. But they held up very well this morning. That suggested that it wasn't a mass exodus. And so, all right, you're looking at some of your best fundamental stocks, a Visa type of name here, an Adobe type of name. These are where you say, all right, if you're going to step in on this move, these are some of the better places to step in. It's not the type of move where you look at and go, oh, okay, let me try to bottom pick with a Nike or something like that. Because if the market continues to go lower, these are the stocks that are not going to get bought up very quickly here. Okay. So anyway, that's just kind of my little thought here on what we're seeing this morning. I'll go through things a little more this afternoon as we've had a little more shakeout. We're 2 hours into a Monday morning with a big gap, and a lot can still change. But definitely, bulls favor on the open, meaning we don't see, big bad bearish breakdown in the metrics. But it's also one where there's still a lot to come and a lot to play out here. One thing is for certain, the environment is getting more friendly for day traders. This was an environment where the average true range on the market was dropping and getting very low. And we have now seen this average true range continue to push on higher. And this is a much better environment for day traders over the last 4 or 5 days. And I do expect that will continue as we go forward. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.